Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Happy Friday to you guys. Today is the last trading day of the week, and in fact, we are pumping ourselves up for another eventful day as we plan to replicate our profitable activity throughout the course of the week. But before we kickstart the session, let's run through our daily routine by confirming that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So your highs are just a feedback for me to confirm that we are all on the same page, and in that regard we shall be kickstarting the session. So thank you very much guys as you give me your feedbacks accordingly in the comment section. All right. So let's see what we have here. Thank you guys. I'm loving the energy this morning. Okay, I can see VV. Sorry about that. Venus 7, Roy 99. Good morning to you. 697-034 96548399. High Heel 2913. Kole Sarimi 979. Jewel Khan. Good morning to you guys. Hello Carrie. Thank you very much. Good morning to you too. Gregory Raspa here. Good morning from this part of the world. I think we are on the same page here with a handful of feedbacks I can find here. So on this note, I welcome you once again to yet another promising edition of the Extra Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be dissecting the current market conditions from a technical standpoint using our simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. So I encourage us all to stay tuned in as you do not want to miss out on any of the valuable ideas we will be talking about today. Today promises to be an exciting one. Remember, today is the last trading day of the week, and there is this psychological expectations that participants who had been part of the trend throughout the course of the week are likely going to be rounding off their trading activities for ahead of the weekend by taking in some of the profit off the chart, and this usually reflects on the chart as potential reversal pattern. So we are going to be taking all this into consideration while we review the current market structure from a technical standpoint. Now, for those of us who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us this morning. I do know that you will be wondering what this is all about and what is it that we are doing on this platform. Well, as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York session. So this session usually kickstarts officially 10 a.m. UTC, 11 a.m. West African time. So I recommend that you stay tuned in during the course of the session so you don't miss out on the ideas we will be deliberating on today. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to make your own trading decisions and strategies. So once again, I welcome you on board and I encourage you to engage in the comment section. So with that being said here, we will be diving right into this business. So in fact, this week has been so profitable as we had significant amount of profit across the assets on our watch list today. But before we go into that details, let's keep tabs with the fundamental factors that will be affecting the market sentiment for today. And for those of you who have been with me for a while, you know how important this is, as these fundamental factors usually manifest on the chart in technical patterns and price movements. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. Now, for today, and in fact for this week, we have been monitoring the economic features from both the United States and the United Kingdom, of course, basically because of the assets we have on our watch list for this week. Now, for today, Friday, December 15th, we have a handful of impactful events from both the United States and the United Kingdom. And that for the United Kingdom has already happened about an hour ago, and we're beginning to see some barrage of development going on in the market as a result of this. So today we are looking at the S&P global publications for both economies. And for those who don't know, the S&P Global is a prominent financial services company known for providing credit ratings, research, and analytics. Its impact on market sentiment is substantial, as its credit rating and market insights can influence investors' confidence, affecting the perceived risk of various financial instruments. Now, for today's publication for the United Kingdom, their publication will be covering the CIPS Composite PMI, the CIPS Manufacturing PMI, and of course the CIPS Services PMI. Now, from the data we have here, both the CIPS Composite PMI and the CIPS Services PMI was way beyond all expectations, giving us a positive deviation of 1.10 and 2.09 respectively. Only for the manufacturing sector, which appears to be struggling at this point, coming in below expectation and even below the previous month, coming in at 46.4, giving us a negative deviation of 1.56. So it tells us that the manufacturing sector is still struggling at this point in time. So we do have a mixed data from the United Kingdom economic docket. So we will be looking at how the market participants, especially on the GBPUSD, have reacted to this event, and of course use the information to project ourselves for the next trading session. So going forward, we also have, is it that I'm not on? I think, please, can anyone tell me in the comment section if everything is quite fine over there? Because I can see that the internal reception is off from my end. It's attempting to reconnect. So give me a moment, please. Let me sort this out and I will be back in a couple of seconds. All right, so we are back again. I'm sorry for the break in transmission. We had some technical issues, but thank goodness things have been sorted and we are back on. So let me know in the comment section if you can see my screen and you can hear my voice loud and clear, as this will confirm that we are all on the same page. From my hand here, things are looking quite fine. Please let me know how it is from your own hand. So with that being said, let's continue. So we were talking about the events we are looking out for today, which are going to be affecting the market sentiment, and it's going to be more of the S&P global publications for both the United States and the United Kingdom. And for that of the United Kingdom has already happened about an hour ago, and I was talking about the mixed data we have here. Both the composite PMI and the services PMI came in beyond expectation, giving us a healthy look in that particular sector. Only for the manufacturing sector that came in below expectations, hereby revealing that this sector is still struggling to gain their stance. So we want to be looking at how the market participants, especially in the GBPUSD assets, have reacted to this event. So stay tuned in so you don't miss out on that one. Then later on today, in about 3 to 4 hours from now, we shall be witnessing the S&P global publication for the manufacturing PMI and the services PMI of the United States economic docket. And from the previous data we have compared to the expectations of the economists, it appears that we might be seeing some contraction in both sectors, as the data here is coming in the expectations is coming in 49.3 and 50.6%. 50.6 respectively, as compared to 49.4 and 50.8 for the month of November. So we'll look forward to see what the actual data is going to be like. But one thing we usually do here as technical traders is to sniff through the current market structure to look out for patterns and structures that we will be using to guide ourselves as market participants anticipates this event. And of course, we know that the anticipation of this event usually reflects on the chart as price action. Now, talking about price action, let's move right into the first asset on our watch list for today. Now, the first asset we are looking at is the USOILSPOT, an asset which has done tremendously well since the beginning of this week. Remember, we did had a couple of losses. Remember, we had a sell position at the beginning of the week, which went into a loss. The same thing with a buy position as well, but we were able to stay consistent with our analytical approach, hereby presenting to us another new opportunities. And along the line so far this week, we've been able to scoop in close to 1,000 pips in profit from multiple entries. Now, for the sake of those who are not part of our earlier session, so that they can all be on the same page with us, I will be running through how the week started for us all in this community and what led to the decisions we made so far. So at the beginning of the week, it was more of a consolidation, as we saw price action confined within the $71.98 level, which happened to be our resistance line at that point in time, and of course the $71.38 area to emphasize the level of indecision at that particular point in time. And of course, we had the privilege of joining a sell position. In fact, we had two of them triggered. We had one right here, and then we had the second one. Though we moved our stop losses, we got token taken out with a reasonable amount of profit on that one. And I remember mentioning that we will be looking out for a retest of the structure to join the decline to the downside. Unfortunately, the sell position was triggered but did not do very well as price action climbed up, taking us out of that position in a loss. Then we also saw our buy stop order above the $71.98 level triggered at the I think on Tuesday morning, and that one also did not do very well as we saw price action break down the structure to the downside, taking us out of that one in a loss as well. Now, if you remember vividly, on Monday we said we will be using this ascending trend line as a yardstick to guide our trading decisions for the week. That is, if price remains above the ascending trend line, we feel comfortable in a buy position and look out for more buying opportunities. However, if price action did break down this ascending trend line, this will welcome selling opportunities. And one interesting thing about the ascending trend line is the fact that the trend line also shares a beautiful confluence with the support line of that range we identified earlier at the $71.38 level. Now we saw price break down the structure. In fact, if you had missed out on the first breakdown, we saw price come back to retest the structure for about two hours before the bearish momentum began, and thank goodness we were part of that move. We joined the first position. We also added more position right here at the breakdown of the $71 area, so we were able to scoop in over 300 pips on these entries as we capitalize on the downtrend move all the way to the downside. Now, during our session on Wednesday's trading session, we begin to see some new development unfold on the chart as we begin to see that sellers are beginning to struggle around this area. Now, we saw price action confined within the $69 level and the $68 area, which further emphasize the level of indecision going on at that particular point in time. And one thing we said here on Wednesday is that we are not going to be selling unless the $68 area is broken to the downside. This level happens to be the lowest point price action has been for this week, and that was the only condition we were looking out for to sell the US All Spot, but that never happened. So this negated the idea of even thinking of selling. Now, with our buy stop order placed at both the $69 area, we capitalize on that counter trend opportunity. And in fact, if you had missed out at the first breakout, the market was so kind enough to come back, retest the structure, and since then price action had continued to climb and find new highs. And if you remember vividly, we had multiple levels identified that we said we will be using to maximize the potential of this move. So we had the $70 level. We also added one more. Hold on a second. We also added one more at the $71 area. And during our live session yesterday, we did talk about adding more positions at the breakout, retest of our week's key level at the $72 area. So we have about 4 buy positions running in profit right now with a minimum of 650 pips in profit at this point in time. Well done, and kudos to everyone who had capitalized on this opportunity. Now, with the way things are going right now, it is very, very important that we move all our stop losses and secure the current position as we anticipate the S&P publication for the United States economic docket later today, which has a tendency of bringing in some volatility into this market. And if you would ask me, I will be suggesting that anywhere below the $71.90 area seems most appropriate to move all stop losses to. Remember that we do want to be giving enough breathing space for price action to move around. So let's ensure we move our stop losses accordingly, protect your positions, and with a well-secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying, or are there chances that sellers could come in at any point in time? Now, to navigate this market structure, I would like to share with you some of the fundamental factors behind the scenes which are affecting the market sentiment so far, and what we want to also have an insight into what is really going on so that we can make a well-informed trading decisions. Now, yesterday we began to hear some positive news from the Chinese government, the Chinese economy. Remember, we were talking about how the Chinese economy was struggling based on the data that was churning out from that sector in the last 2 weeks. But yesterday we got positive news as the National Bureau of Statistics of China recently disclosed that the industrial production saw an improvement, rising to 6.6% in November compared to the previous 4.6%, surpassing the market anticipated 5.6%. On the other hand, Chinese retail sales experienced a growth of 10.1% from the previous 7.6%, but it fell below the market consensus, which had expected a 12.5% increase. Now, the final one that makes things much more interesting from the economy is how the People's Bank of China also opted to maintain the 1-year medium-term lending facility rate, that is the MLF, at 2.5%. Alongside this decision, the central bank addressed the maturation of 650 billion yuan worth of MLF loan by injecting a substantial 1.4 trillion yuan, an increased effort to fortify the liquidity in the banking sector. So these are very interesting development coming in from the Chinese economy, and as a result of this is sending some positivity into the market, as we do know how important and influential the Chinese economy is to this particular market. China being the largest oil importer, and with recent positive economic data from the Chinese government, this could probably bolster crude oil prices and hereby increase the demand for this commodity. And we do know that when the demand increases, definitely price is going to be rising. And we can now understand why we are beginning to notice some positive traction in favor of the US oil spot in the last couple of days. Now, with this in mind, I do want to be keeping a bullish outlook in this particular market. However, that does not mean that sellers could not come in at any point in time in the case of profit-taking activities, as market participants gradually round off their trading activities ahead of the weekend. Taking some profit of the market may likely incite some sell-off here before the week ends. Now, how do we intend to capitalize on the next move based on all of these informations we have gathered? Now, to do this, we would like to scale up into the 4 hours time frame, where we want to look at things from an holistic perspective and at the same time refresh our memories as to what we talked about on the higher time frame at the beginning of the week. Now, on the 4 hours time frame, what we did on Monday was to take into consideration the nature of price action since the month of October. And it is quite clear that price action has been very bearish, where we saw price action transition into a descending channel. Now, when we connected the series of lower highs, we have the resistant line of the descending channel, and then connecting the series of lower lows, we have the support line of that descending channel. Now that we have the structure in place, you know that when price is within the descending channel, we definitely want to be looking out for selling opportunities. Now, to guide our decision for this week, we were able to spot a key level at the $72 area, which we said we will be using to guide our trading decisions. Now, look at how this level has played a major role since the month of this November. We saw how this area was more of a buying niche before this level was broken last week's trading session. And for the fact that price broke down this level with an engulfing bearish candle, we were of the opinion that price may come back to retest the structure, and in fact we saw continued selling pressure around the $72 area. And for the fact that price action remained below our key level, it makes quite a lot of sense to look out for patterns and structures that support the idea of selling. So we were good enough to capitalize on this bearish momentum, which gave us close to 400 pips on that one. Thank goodness for that one. Then we also saw immediately that as soon as price action tested that $68 area, we saw some buy pressure resume, which of course gave us an opportunity to join an uptrend move as well, which we are currently in right now. And I did mention earlier that we do want to be moving our stop losses accordingly to protect all running buy position at this point in time, and I do hope you have done that. Now if you look at the structure here, in the last 24 hours price action appear to have broken above our key level at the $72 area. And you know how we use our key levels. As long as price action remains above our key level, we will be looking out for patterns and structures that will support the idea of buying that particular asset. Now, with the way things are going right now, you will see that after the breakout, sellers have been struggling to break down the structure, which gives us a sign that buyers may likely be gaining momentum to push price further to the upside. Now, in this case scenario, it will make quite a lot of sense that we maintain a bullish bias here as long as price action remains above that key level at the $72 area. Now we shall be looking out for more buying opportunities if price can break out the previous high for this week, which is situated at the $72.75 level. Let me call it that way. So we look out for more buying opportunities if price action goes on to break out of that level. Now, like I said earlier, today being the last trading day of the week, we cannot ignore the potentials that certain opportunities could come in as a result of rounding off of trading activities, profit-taking activities, which could reflect on the chart as price breaking down the $72 area. And remember that below the $72 area has been a strong selling niche in this market in the last couple of weeks. And if price can come back below this level and buyers find it difficult to break back above the structure, which usually will reflect on the chart as continued selling pressure below this area, then we might be seeing a situation where price will drop to the downside. So we are at a crucial moment in this market where the $72 area will be our center of focus for today's trading session. So I encourage us all to mark out the $72 area on our chart, as we are going to be using it as a reference point to guide our independent trading decisions for today. Now, with this information we have gathered on the 4 hours time frame, let's scale back down into the 1 hour time frame to position ourselves for the next move. Now, with the way things are going right now, that's our key level just right there at the $72 area. Price remains above the level, and then that is the $72.70 area which we marked out on the higher time frame. So I have a buy stop order sitting above the $72.70 area. If price can break out of this level, I'm hoping to maximize the potential of that bullish move. However, if selling pressure at any point in time may be due to the anticipation of the S&P or whatever data comes in from the S&P and price action drops to the downside, breaking down the $72 area, a retest of structure will be a beautiful confirmation to join a decline to the downside. So this is how we are going to be managing our position on the US All Spot for today. I still maintain a bullish bias right here and hoping the price will break out of that resistant line. So if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section, and trust me, I'm here and willing to be of help in that regard. So let's see what we have, and I'll be taking the next 10 to 15 seconds off to see if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, greetings to everyone that just dropped a comment recently. Nichis Mercury 91361, Janine, Junonomics, and another name here which I cannot pronounce, and Modak. Good morning to you guys. Awama Daniel, good morning to you. I'm very well, thank you here. All right, so in the absence of no questions, I just want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, and we have quite an interesting setup going on at this point in time, though we've been very profitable this week so far, as we had this beautiful ascending trend line supporting our bullish bias since the beginning of the week. Yesterday, due to the data coming in from the economies, we had some sell pressure come into this market, coming back to retest the ascending trend line. And remember, I told you I wouldn't be taking the sell position, as I want to see price action, how price action will react to that ascending trend line before I make any decisions of either selling or buying this particular asset. Now let's run through how the week started for us all in this community and what led to the decisions we had made so far this week. Now the week started with a consolidation phase for us. Remember, we saw price action initially confined within the $16,097 area and the $16,037 level. In fact, that was a beautiful $60 range where price action was, emphasizing the level of indecision at that particular point in time. And of course, you know how we do it in this community. Whenever we have this kind of range that is a flat channel, we know that there is an uncertainty going on. Hence, we need to exercise patience and wait for either the breakdown of the range to give us an opportunity to sell, or the breakout of the range to give us an opportunity to buy. And if you look at what happened here on Monday, we saw how price action, and for the fact that price action was above our key level at the $16,000 area and that ascending trend line, we positioned ourselves above the $16,097 area to capitalize on that uptrend move. And remember that we said we will be maximizing the potential of that bullish move by adding more positions at the breakout of the 16,160. We also added one more at the 16,260, and of course added another one had the breakout of the 16,395. And then yesterday I mentioned that if the momentum continues, a breakout of the 16,660 will be welcoming more buy position. But unfortunately for buyers, that never happened, as we saw the persistent selling pressure push price to the downside, breaking down the support line of that range. And I mentioned here yesterday that our center of focus is going to be between the 16,660 and the 16,600 area, where depending on the direction of the breakout will tell us where price may likely go for yesterday. And I did mention that for those of us who are scalpers or feel comfortable in counter trend opportunities, you might want to take advantage of the breakdown retest of the 16,600 level. And I did mention that this trend line here, depending on how price reacts to this trend line, would determine if we are going to be joining a bearish momentum, and if a sharp rejection of that structure happens, this will incite an opportunity to buy. Well, for me, I missed out on this buy opportunity as the market did not give me any significant setup to join that bullish move. But for those who joined the counter trend opportunity here, they must have made about 170 pips. You know, I did mention that you want to be having your TP target around the ascending trend line, and that's 16,395 level. So for counter trend traders, well done if you had capitalized on this opportunity. Now, at this point, how do we intend to capitalize on the next move on this particular asset? Well, there's not much to say here. The first thing first is the acknowledgement of the fact that price action has been bullish since last week Friday, and we did have an ascending trend line to buttress the strength of the buyers in this market. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable buying that particular asset. Now, if you look at what is going on here, price action is definitely still above the ascending trend line, but buying around this area will need some significant confirmation before we jump into any position, especially due to the sell bearish opportunities we saw here yesterday. Now, if we consider the breakdown of the 16,600 that happened during the New York session yesterday, this could be a signal that could incite a sell-off in this market. Now, let's extend the 16,600 level to the future and look at what we have here. From a technical standpoint, we do expect that when price breaks down of a key structure such as the 16,600, we do expect that price may come back, retest the structure at some point to incite a downtrend move. Now, at this juncture, we are at a very crucial juncture here where price action, as soon as it tested the 16,600 in the last 2 hours, we have been noticing some selling pressure around that area. Now, the question here is, will this be what will incite a sell-off that will break down this ascending trend line for the first time in the last 1 week? Or are we going to be seeing price break out of that 16,600 to continue that uptrend move? Now, with the situation we have here, I'm going to be using the 16,600 level as a determinant of the direction of price action for today's trading session. And in fact, I will need price action to break down that ascending trend line before I can feel comfortable joining a bearish move here. Now, to make things easier to capitalize on, we have somewhere around here that is the 16,550 level, another psychological area considering the round figure of that price, which we can actually use to capitalize on a bearish opportunity here. Now, if price action breaks down the 16,550, sorry, this is 16,550, price would also have broken down that ascending trend line to further emphasize the strength of the sellers, hereby giving us an opportunity to join a downtrend scenario. So below the 16,550 will be all I will need here to confirm that we are going to the downside. However, if it so happens that price action breaks out of the 16,600, I will need price to take out all the sell positions around the 16,600 area before I can feel comfortable buying this particular asset at this point in time. Now, the reason why this is simply because of how this level, though it's the highest point price action has been for this week, had continued to negate all attempt by the buyers to break out of that structure. And in fact, if we can see price take out all the sell positions there today, it will be a good opportunity for us to sell. However, there is something here I would like to emphasize. We may actually see an opportunity to join that uptrend move even before the breakout happens. And that will only occur when we begin to see some series of higher highs and higher lows around this area, maybe on our lower time frame. Then we could actually join, then have a buy stop order above the 16,660 to capitalize on that uptrend continuation. So you can see here that for today's trading session, our center of focus is going to be between the 16,600 and of course the 16,550, where depending on the direction of this breakout will give us an idea of where price is likely going for today's trading session. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my view on the USTech100. So mark out these levels, and if you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. All right. So the next asset on our watch list for today is the cable market. That is the GBPUSD. Another phenomenal week we have on the GBPUSD since the beginning of this week. Our journey has been nothing short of triumphant as we ride a wave of success with over 700 pips in profit across 6 buy positions we capitalized on since Wednesday's trading session, and thanks to the pairs maintaining its weekly gain so far. This stability has been supported by a hawkish outlook from the Bank of England. Remember yesterday, the Bank of England chose to keep interest rate at 5.25%, with Governor Andrew Baylis indicating that there is still work to be done before inflation aligns with its target. And for me, this is a sign that there is still a likelihood that interest rate will be increased in the nearest future, hereby making the pound sterling an attractive asset for investors to put their funds in. And this has also resulted in this positive traction in the favor of the US dollar. And of course, all of this coupled with the comment from Andrew Baylis has contributed to an overall hawkish sentiment. Now, at this point in time, investors are now eagerly awaiting the Purchasing Managers Index data from the United States. The one from the United Kingdom has already happened, as we saw some mixed data there. And then as we anticipate this, the US PMI data, what is going to be our plans? How do we intend to manage our positions on this particular asset? Now, for the sake of those who missed out on our earlier sessions, let's quickly run through how the week began for us all in this community and what led to the decisions we made. Now, at the beginning of the week, we had a range identified on this chart. If you remember, we had the 1.25850, which was serving as the resistant line of that range. So let me just highlight it so you can see things clearly here. So we had price confined within the 1.25580 level and the 1.25350 during the first 12, 13, 14 hours of the week. And then the fact that price action was sitting above the ascending trend line, we identified on the higher time frame, that is the 4 hours time frame, we were keen on buying the GBPUSD at the beginning of the week. And as a result of this observation, we did position ourselves just above the 1.25580 level to capitalize on that uptrend move. Now, for the first couple of days of the week, it was more of price consolidating, going through a choppy situations, as we had multiple buy at every point in time. You can see buy here, price just moves a little bit to the upside and then drops back down again into that structure, which emphasized that there's been quite a level of uncertainty around that point in time. But with the ascending trend line as our yardstick to guide trading decisions for this week, we maintained a bullish bias. But we did mention that if at any point in time this trend line is broken to the downside, we shall be looking out for selling opportunities. And indeed, we took advantage of a bearish opportunity, which did fairly well, as we saw price moved about 50 pips before it met a roadblock at our key level at the 1.25500 area. And if you remember what I said on Monday and Tuesday, I said that even though we are in a sell position at the breakdown of that ascending trend line, I'm still not convinced that sellers will be dictating the pace, as a breakdown of our key level at the 1.25 will be a good signal to go bearish. And of course, that never happened, as we continue to see buy pressure around the zone we talked about on Tuesday or Wednesday. We talked about this, that continued buy pressure around this area for me is a sign that buyers still struggling to maintain their stance in this particular market. And I did mention that if I do want to be buying, I will need price action to climb back above that ascending trend line, after which we will be back within the buyer's territory. And as a result of this, we positioned ourselves just above the 1.25700 area to capitalize on that uptrend move, though we came in very, very late, as we missed out on all this one. And the reason why we weren't buying was simply because price action was still sitting below that ascending trend line. But thank goodness we were able to maximize the potential of that bullish move. Remember, we added positions at the 1.259, the 1.260, then we had the 1.265, and then the 1.267 as well. And I think we had one more position. Okay, we never had another one. So we have a minimum of 1, 2, 3, 4, 5 positions running with approximately 700 pips in profit at this point in time. Well done, and kudos to everyone who has been part of this profitable journey. Now, as it is right now, we begin to see some interesting situation go on in this market, as you will see that in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, and 17 hours, price action has been confined within the range between the 1.278 and of course the 1.27460 to emphasize the level of uncertainty that is going on in this particular market. And of course, you know how we use this kind of flat channel, especially when we identify them on our market structure. We exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, in as much as we have a range right now, we need to take some other technicalities into consideration as well. First of all, the fact that price action has been on a strong bullish momentum since the midweek, it's more convincing to join a bullish momentum, as this range here has a chance of transition into a trend continuation pattern where the breakout of the 1.278 will be all we need to capitalize on more buying opportunities in this market. So in that regard, I placed a buy stop order above the 1.278, which appeared to have been triggered at this point in time, and I want to be seeing how far this momentum will go. Please ensure your stop losses are in place. Anywhere around the support line of that range seems most appropriate, which will be dovetailing to a minimum of 30 pips thereabout. Now, personally, I have my buy positions triggered, and for those who are yet to, placing a buy stop order above the 1.278 makes quite a lot of sense, considering the impulsive move we have been witnessing since the beginning of the week. However, in as much as we're looking out for buying opportunity, it makes quite a lot of sense to also consider the potentials of the sellers, especially on a day which happens to be the last trading day of the week, where it is expected that participants may want to be taking some profit off the charts as they round off their trading activities ahead of the weekend, and this could result in some selling pressure resume at this point in time. So because of this, I want to be looking out for selling opportunities only if price action will break down. First of all, retest of structure to confirm that truly set buyers have lost the momentum in this market, then we could see a temporary move to the downside. And please note that this is a counter trend opportunity, and we still have this ascending trend line in place where price may come back into to incite an uptrend continuation. So let's keep this in mind. If we have a breakdown retest, then this could welcome selling opportunities. I'm not planning to add any more sell position. Only one sell position we do for me, because we are within a counter trend opportunity, and price action could gain bullish traction at any point in time without even giving any signal. So this is my view on the GBPUSD for today. Our center of focus basically for today's trading session is between the 1.278 and the 1.27460, where depending on the direction of the breakout will give us an idea into where price is likely going to be closing for today's trading session. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions, feel free to drop them in the comment section. I wouldn't be taking 5 to 10 seconds this time, as we're already running out of time right now. So instead, I will be moving straight into the next asset on our watch list while I keep tabs with the comment section to see if there are any questions whatsoever as regards to what we have discussed so far. So moving on, I will be taking on the last asset on our watch list for today, which is my favorite asset, and of course the XAUUSD, popularly known as the gold spot. And on the gold spot as well, we've done very, very well this week. As you will see, our journey continues to be marked by success as all our buy positions are thriving right now and accumulating over 1,650 pips as the price of gold remains in a consolidative phase, especially during the Asian session stroke the early hours of the United Kingdom session. Now, market participants reflect a nearly 60% likelihood of the Fed Reserve initiating interest rate cut in March 2024, with the odds of a May rate cut currently standing at 90%. Well, this expectation is likely going to be capping significant upside for the US bond yields and continues to weaken the US dollar. So consequently, lending support to safe haven assets such as the gold. So with this fundamental perspective and sentiment in this market, I will continue to remain bullish on this one, but at the same time remain open to new possibilities that may happen to take price to the downside. Now, for the sake of those who missed out on our earlier session, let's run through how the week started for us all in this community. So at the beginning of the week, price was oscillating around our key level at the $2,000 mark, confined at the same time between the $2,007.50 level and of course the $1,995 area. So the momentum at the beginning of the week was tending towards a bearish move. As you will see, we capitalize on our first sell position as soon as price action as soon as price action broke down the 1,995 level. So we had our first sell positions here, then we added another one at the breakdown of the $1,991.50 level, and in fact those two positions gave us something significant. The first one went to as far as 200 pips move, while the second one moved over 140, but we did move our stop losses to secure the position, and at the end of the day buy pressure resumed, taking us out of that position with a minimum of 150 to 200 pips depending on where you moved your stop losses to. Then during Tuesday stroke Wednesday's trading session, we begin to notice something interesting go on in this market, as we saw how it has become difficult for sellers to break through the 1,976 level. Though we had price break down the level, that was on Wednesday morning, we had a sell position triggered, which did not do well at all, as we were taken out of that sell position in a loss. Now, to guide our trading decision on Wednesday's trading session, we decided to use this descending trend line as a yardstick to guide whatever decision we were going to be making. And one of the things we said is that as long as price remains below the descending trend line, we shall be looking out for selling opportunities at the breakdown of the 1,976, which later did not happen, but instead price action breached and break out of that descending trend line to emphasize and confirm to us that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, as a result of this observation, we did position ourselves above the 1,983, which shares a beautiful confluence with that descending trend line, where we said a breakout of the structure will be welcoming buying opportunities. Then we also had multiple levels marked out on our chart. We had the $1,991.50 level. We also marked out the $2,000 area. We also marked out the $2,007.50 level, and also we marked out the $2,035 area, all of which we said a breakout of the structures will be welcoming more buying opportunities. So we have a minimum of 1, 2, 3, 4, 5 buy positions running in profit right now. So well done and kudos to everyone who has been part of this profitable journey. Now, as market participants may anticipate the event coming up today, it is very important that we secure profit from all our positions ahead of the weekend. Hence, we are committed to safeguarding our current buy position. And if you would ask me, based on the current structure, where do we think is most appropriate to secure this position? Well, I will just tell you that anywhere between the $2,035 area. Remember, we do want to be giving enough breathing space for price action to move around. So between the 2035, I'm not sure why my chart is doing this. I'm not sure. So 2035 and 2025 area. I don't know why that is. I don't know what's happening around here. Okay, so let me try this one more time. Okay, so between the 2035 and the $2,029 area seems most appropriate to move all stop losses to, while we give enough breathing space for price action to move around. Now, with a well-secured position at this juncture, I still maintain a bullish bias. In fact, this morning, I marked out this level at the $2,040 area, where I had another buy position triggered, and of course I'm also having another position above the $2,048 level, which happens to be the highest point price action has been for this week, where a breakout of that level as well will definitely be welcoming more buy position at this point in time. Now, for those of us who had missed out on the recent breakout of the 2040, well, you can exercise patience and wait to see if the market will come back and retest the structure to incite another wave of bullish momentum. So if price comes back into the 2040 zone and we begin to see buy pressure resume around that area, we could capitalize on the next move. Now, another thing I would like to call our attention to, which will be serving has a yardstick to guide our trading decisions for today, is this ascending trend line I was able to spot this morning. So I want to duplicate this one and use it to guide our trading decisions for today. So bringing back the candle chart here, so let's connect all the pivot lows here. So I will thicken this a little bit to emphasize its importance here. So this ascending trend line here is going to be playing a major role in guiding our trading decisions for today. And what this simply means is that as long as price action remains above the ascending trend line, we shall feel very comfortable in our buy position. So price may come back, retest the structure, which is still within the ascending trend line, where the resumption or emergence of buy pressure will welcome more buying opportunities for us. So let's mark out that trend line and of course the $2,040 area to guide our trading decisions for today. However, in as much as we're looking out for buying opportunity, we cannot ignore the fact that today is the last trading day of the week, and we could have a situation where participants may be mindful of the situation surrounding the gold asset, especially the fundamental factors, the geopolitical tension in the Middle East. They might want to start closing in some of their positions ahead of the weekend because they never can tell what could happen during the course of the weekend, and as a result of that, we could be seeing some profit-taking activities happen at this juncture. And if that is going to be the case, then I would like to see price action take out the $2,029 area. As you will see, this level here has been the support line of the range where price action has been captured in the last 24 hours. Now, if price action breaks down the 2029, I wouldn't be selling right away, as I want to see some confirmation like a retest of structure to confirm that truly sellers will be dictating the pace today before opening any sell position. So these are my views on the XAUUSD today. We have a simple setup that we will be using to guide our trading decision for today. So I encourage us all to mark out these levels on our chart, as we will be needing them to guide our independent trading decision. So it's on this note I would like to call it a day here. And in fact, it has been a wonderful week, very profitable on all the assets on our watch list. And once again, congratulations to everyone who has been part of this profitable journey. So today's session saw us attend to 4 major financial assets, which includes the US All Spot, the USTech100, the XAUUSD, and of course the GBPUSD, all of which we were able to identify simple trading setup using our fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential direction of price action for today. So I do hope we marked out our key levels accordingly, as we will be needing them as a reference point to guide our independent trading decisions for today. And always remember that every decisions we make in the financial market is more or less an educated guess, and not until price action hits your TP target. So in that regard, you want to ensure that you have a well-defined risk management strategy, which should be consistent with all the positions you take from your portfolio. So please take this in mind and align with it accordingly. Now, for those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from this community today. And if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand how things works, and eventually be able to use the information you have gathered here to make your own independent trading decisions. So I look forward to seeing more of you on Monday morning, 11 a.m. West African time, 10 a.m. UTC, as we come here again to start the new week on a positive note. So with that being said here, I want to wish us all the best of luck today. Remember your risk management strategy. Remember to allow your structures to mature before you jump into any positions. So on this note, I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful and beautiful weekend. Bye bye.